Hello, students. So today you have completed your audit paper. That is one of the very heavy preparation that you have done throughout the preparation time. Okay, ultimately the paper comes to an end. Okay, and I really hope very positively that you all have attempted very well and done well in the paper. After the completion of AFM paper, I was thinking that audit would be manageable and the paper would be good, because after AFM being so tricky, so complicated, okay, a little difficult end, okay. I was expecting genuinely that audit would be a better one. But again, we came up with the surprises from the institute. So the institute comes up with a proper surprise again, and the paper happens to be an above average one. So it is not very simplified. It is not simple, we can say. It is a complicated one, especially with regard to MCQs, where they have, asked the questions which are completely out of the box, which are not the routine kind of questions that come up. So we see that there is a kind of questioning every time that is happening, but this time the kind of questions picked up are completely new. Okay, focuses more on all the new topics which are added to the syllabus. Okay, even MCQs, the way they have drafted and the areas that they have covered, especially from bank, NBFCs, these are something very different. Okay, so here it was very important that the understanding of the concept and the calculation part, thorough reading was important. So if you have not done the proper reading of it, then you would definitely find it difficult. Otherwise, it is not a paper where you can't score. If you're reading, the learning of yours has been very good from the material, okay, you have understood the concept in detail, then I think you'll be able to manage it. So not a very easy paper, not a simple paper. The way the language has been drafted, the way areas have been covered, okay, they are complicated. Descriptive part also, all the type of new areas have been covered. And if the topics are, the ones which are repeated, like for example, NBFC and all, the way of questioning has changed. So basically a complete new paper has come up. Okay, something which students might not be expecting. So we could say that yes, it is a little difficult one and above average paper. Second, when you look at MCQs also, the questions are lengthy. The questions are talking a lot of things. Okay, so the learning has to be very correct. The focus is on BRSR reporting. The focus has been on the standards, some which are not very commonly asked. Those standards have been picked up on. On bank, NBFC, the kind of questioning is different. Okay, so without much discussion and discussing all about this, let us go to the paper and see how we have done it. There could be a possibility that one or two questions you could feel that your answer could be correct, or there could be a kind of discussion that you want to have. So you can drop your message or your question in the comment, and definitely I'll be happy to help and reply back to you. Interpretation, there could be a difference, so please see that you please revert back to me, give me your comments regarding what answer you feel is appropriate. We could have a very healthy discussion regarding what could be the correct approach and the correct understanding. Okay, so with this, let us get started with our discussion of MCQs. About descriptive, I'll give you just a quick scenario or a quick glance, but we'll focus more on MCQs now. Okay, so let's pick up. All right. So I hope the screen is visible to all of you. Okay, so we'll take up the first one now. That is integrated case study number 1. So XYZ and Associates LLP is a firm of chartered accountants consisting of 12 partners and has been allotted central statutory audit of Mahabank Limited, a scheduled commercial bank. So it's obviously a question pertaining to bank audit and all. So they have given you 4 different categorization of scenarios here, and questions are based on that. First is, during the course of audit, the engagement partner, you as the engagement partner, have been asked by the general manager to calculate CRAR. That is capital to risk weighted assets ratio. That is nothing but in a simple language, we call it to be the capital adequacy ratio, CAR. For this purpose, you have been referred to the Master Circular on Prudential Guidelines on Capital Adequacy and Market Discipline, New Capital Adequacy Framework, NCAF, which provides the guidelines to be followed by banks for capital adequacy. So if you have done the audit of banks, we know it very well that these guidelines give you a very clear understanding of how CAR has to be calculated, with the understanding of what is the Tier 1 capital, Tier 2 capital, risk-weighted assets, how is the computation done, everything has been given in these guidelines. You are informed that the basic approach of capital adequacy framework is that a bank should have sufficient capital to absorb the table resources, to absorb any losses arising from the risk in the business. So we know the meaning of capital adequacy, enough capital to absorb the losses. You have observed that capital is divided into tiers according to the characteristics and qualities of each qualifying instrument. Okay, if you have gone through the material, exactly same language is given there also. Okay, they have explained you in the same manner that for the purpose of understanding the characteristics and the quality, they divide the capital into Tier 1, Tier 2. in order to understand the quality as in how much capacity of absorbing loss they have. Correct? Same language has been used there. So capital is split into two categories, tier 1 and tier 2. Representing different instruments qualify as capital. You have to calculate eligible total capital funds comprising of tier 1 is having share capital and disclosed reserves. So tier 1 includes share capital and reserves. Tier 2 is other reserves as well as subordinate debts. So I think this is correct because tier 1 is including your capital and your disclosed reserves, and tier 2 is going to be all the other reserves as well as some of the allowed subordinate debts. Okay. The risk-weighted assets is given to you as 25 crore and the off-balance sheet items are 5 crore. I think details are very clearly available. So if they ask you to compute the CAR, it's quite simple to understand that you have to take up the numerator and the denominator correctly and you get the answer. As a part of the scope, okay, further what has been asked to you, the audit firm has been asked to find out the correct position of demand and time liabilities of Mahabank. DTL balance as on 30th September 2024 was rupees 50,000 crore, which included the following. So they have told you that the calculation of DTL is 50,000 crore. But in this, what they have included, they have given to you paid up capital, reserves, credit balance, loan from RBI, refinancing, part recoveries from borrowers, net credit balance, interest accrued, margin held, etc. Now, all of these things have been given to you. So obviously, the question is going to be regarding whether DTL amount is correct or not. Okay. This also, when we do the discussion regarding about statutory liquid ratio, okay, CLR calculations, that time we understand very clearly regarding the DTL. Okay, that time when we discuss in bank audit of banks, we clearly understand that as per the RBI guidelines, in DTL calculation, what has to be included and what has to be excluded. And this list, if you look at it, it is come in the line only. So if you look at the study material, it is in line given what is included, what is excluded. So our duty here is to calculate the correct DTL, obviously. Okay, then after that, we have during the financial year 24-25, XYZ and Associates is appointed statutory auditor, which was set up under Companies Act 2013 and got itself registered as NBFC, fulfilling the required criteria. During financial year, the company commenced operation on a massive scale. You are informed that RBI has revised the facets of existing NBFC classification. So we don't have the earlier classification of NBFC now. We have the new classification, and the new classification talks about what? It talks about the base layer, it talks about the middle layer, the top layer, and the upper layer and top layer. Correct? So that is based on the prudential norms and everything. Okay, for everything it is differently given regarding asset classification, prudential regulations, etc. So based on 4 layers that are defined based on size, activity, and perceived riskiness. During financial year 24-25, APP Limited has accepted a deposit of 900 crores, while its asset size is 990 crores. It has also taken SPDs, Infrastructure Debt Fund, Housing Finance, Infrastructure Finance. So all the activities are included. The auditors are about to begin the audit of APP Limited, for which your audit team has been asked to prepare a checklist. Okay. XYZ and Associates LLP have been appointed as the auditor of heavy electricals, PSU, okay, which has been audited by CAG. It has been intimated about the intention of taking a planned performance audit. Okay, so here they're asking you about the ADM, okay, audit design matrix. And they're asking you when you design the audit design matrix, we have those 5 things that you have to include. Okay, so what are the 5 things? The question is based on that. All right. Then locate everything. Let's pick up the questions. Keeping in view of the information in para 4, that is regarding the PSU. In case of performance audit of PSU, which one of the following is not a part of audit design matrix? So remember the chart that we studied regarding ADM. We have first the audit objective. Then we have audit questions. Then we have audit criteria. Then we'll have the evidence. And then we have the data collection and analysis methodology. Correct? So we have 5 things to be included in the audit design matrix. So understand evidence, audit questions, data collection, analysis methods are included. So here they're telling you what has not to be included. So not to be a part of audit design matrix is going to be audit program, because there are 5 things, right? We have audit criteria. If you remember the design, it is going to be audit. It will be audit objective. Okay, audit questions, audit criteria, evidence, and then data collection and analysis. Correct? So here the only thing not covered is audit program. So the answer should be audit program because it's not a part of audit design matrix. Then after that you have, based on the facts given in para 2, you are required to compute DTL. I told you this question is regarding DTL calculation. So quickly you have to get the understanding here. If you look at it, total is 50,000 crores. Paid up capital cannot be included. Reserves cannot be included. Remember RBI guidelines, all these are given in line to you. Credit balance in P&L account cannot be included. Loan taken from RBI cannot be included. Refinance taken from Exim Bank and NHB, or maybe even NABARD would be given here. Okay, SIDBI would be given here. So all of these will not be counted for the purpose of DTL. So this cannot be taken. Part amounts of recoveries from borrower in respect of debt considered bad will not be taken. Net credit balance will be included. So this is correct. This we include. Interest accrued but not accounted. We know interest is, periodically it accrues. The accrual is happening daily, but we account for it periodically. Even then, is it included in DTL? The answer is yes. So though it is accruing daily, we are accounting periodically, even then included for DTL. Margin held and kept in sundry deposits, it is not going to be included. So what you have to do is, you have to, from 50,000, you need to minus all these numbers of 25, 1650, 1210, 575, 480 crores. Okay. Then 125 also, and 80. Okay. After that, the number that will be remaining with you is going to be 19,360 crores. So that is going to be the answer. So you just have a quick calculator and you do it, you'll be getting it. Okay, so this is clearly available in RBI guidelines, what has to be included, what has to be excluded. So if you do it like that, you'll get it. Then based on the facet here, correct percentage you have to understand it has to be tier 1 plus tier 2 divided by risk-weighted assets plus off-balance sheet items. Correct? So tier 1, tier 2 has been given to us here very clearly. So you can look at the tier 1, tier 2. It is 220 crores plus 50. That is 270 divided by 30. Okay, the 9% is 9%. It's 9%. This was quite simple. Okay, so 9% is the answer here. Now, keeping in view the information in para 3, identify which type of layer it falls into. So NBFC, just now we saw, they are telling you regarding the accepting deposits. So as soon as you understand it's accepting deposits, the idea is that obviously it is not going to be the base layer, because base layer is going to be what? Non-deposit accepting. Okay, they don't accept deposits. So it doesn't come in base layer. So understand here, if you look at it, it comes in the middle layer because it is accepting deposits. And when you accept the deposit, here we say if it is deposit taking, then we don't look at the size. And if it is non-deposit, then we take it to the size of 1,000 crores and above. Correct? So because it is accepting deposit, the size will not be relevant for us. Plus, it is taking infrastructure debt fund, housing finance. Okay, primary SPDs are included, infrastructure finance is included. So it will very well qualify for middle layer. So the answer is middle layer. Okay. Middle layer, because it is deposit taking. So irrespective of size, and all the other things are covered here. So it is middle layer. Okay, then. After that, the question comes on chapter 7. Okay. So that is the completion of the first one. Moving on to the next one, for conducting the statutory audit for the financial year 24-25, CAP has been appointed by C Limited, okay, SCA Limited, which is the verge of becoming a SIC unit, and has accumulated losses, but the said losses are not equal to or exceeding the entire net worth. So they don't have a negative capital or negative net worth. As per the latest audited financial statements of 23-24. The audited accounts for the year 21-22, 22-23 were showing liability for payment of undisputed audit fee payable to the predecessor auditor, but were settled promptly in financial year 23-24. So you need to understand you are appointed for 24-25. For you, the previous year is 23-24, where you have to look into the undisputed part. Okay, all right. In terms of Council General Guidelines 2008, Chapter 7, read with relevant proviso. Chapter 7 talks about what? Appointment of the auditor in case if there is a if there is a problem regarding settlement of undisputed dues of the predecessor auditor. Okay, if you are appointing without settling the dues of the earlier auditor, if you accept that, then you'll be guilty of professional misconduct. Correct? So here first you have to see that. First they say if you are appointed as the auditor, wherein there has been a predecessor whose fees have not been settled yet, then you will not be allowed to take it. But then they say also take into account the proviso. What is the proviso here? Provided if it is a SIC entity, and there has been a proper agreement between the auditor and the auditee, then in that case, can it be undisputed or can it be unsettled? Yes. So here understand now two things. First, you look into whether it is SIC. Then see if there is unsettled fees. And then we'll discuss whether chapter 7 will make you guilty. Okay, first of all, understand what a sick entity. A sick entity is going to be one, or a sick unit is going to be one, where there is a negative net worth. What is the meaning of that? That means your accumulated losses, okay, it is either equal to or it is exceeding the net worth. Okay, so the losses are so much that you're not able to cover up. So it is a negative zone. So it has to be a negative net worth. Second, the settlement of the amount has not happened. But if you look at it, you are appointed for which year? 24-25. But previous year, they have completely settled it. So both the things are not happening. It is not even sick because it is on the verge and their losses are not equal to the net worth and all that or exceeding it. Second, they've already settled in the previous year. So it is not having any kind of unsettled fees here. So in both the cases, things are not settling. So here, obviously, he's not going to be guilty under chapter 7. So he'll not be guilty of professional misconduct if he accepts this audit. Okay, so now in terms of Council General Guidelines 2008, chapter 7, read with relevant proviso of the said guideline, which of the following statement is correct? CAP shall be deemed to be guilty of professional misconduct as he has accepted the appointment of the auditor of C, which has not paid undisputed audit fee for the year 21-22 of the predecessor, though settled. So this cannot be the correct one. Is it getting selected like this? Next, CAP would not be guilty of professional misconduct as he has accepted the appointment as an auditor of C Limited, which is on the verge of becoming sick unit, but whose accumulated losses are not equal to or exceeding the entire net worth as per the last audited accounts for the year 23-24. No, this is incomplete. Would not be guilty of professional misconduct as he has accepted the appointment. No. Next, CAP would not be guilty of professional misconduct as he has accepted the appointment of the auditor of C Limited, which is not a sick unit. Obviously, we proved it now. It is not a sick unit. Okay, whose accumulated losses are not equal to or exceeding the entire net worth as per the last audited financial statements, and there are no unpaid, undisputed audit fees. Okay, so basically this is the right answer. The answer has to be C. Why? Because it is not a sick unit. We understood why. Second, it is telling that there is no unpaid, undisputed audit fee because it has been settled in the previous year. This is the most appropriate answer if you look at it. Most appropriate. Okay, most suitable here. CAP shall be deemed to be guilty of professional misconduct as he has accepted the auditor of this, which is on the verge of becoming sick unit and is not paid undisputed audit fee of predecessor auditors. No, this is not correct. The answer should be this one only because it's the most appropriate one if you look here, because we understood it's not a sick unit. Second, it's already been settled in the previous year. So because of that, he's not guilty of professional misconduct. Okay, because both the things are not satisfying. Chapter 7 will become applicable if there is undisputed audit fee. Correct? Second, it will be applicable, the proviso will become applicable if it is a sick unit. In this case, both are not applicable. Neither there is undisputed audit fee, unsettled. Second, neither it is a sick entity. So neither the guideline will become applicable nor the proviso. And because of that, what will happen is he's not going to be guilty of professional misconduct. Next. Kali Limited is India's one of the largest FMCG company with 50 years heritage in the country in terms of compliance of reporting under BRSR. For the financial year 23-24, CEO and MD of the company reports that at Kali Limited, our BRSR adheres to the 9 principles of SEBI framework on sustainability reporting, informing stakeholders of our sustainability endeavors. While giving principle-wise performance, the following 4 elements associated with respective principles need to be covered. So they're covering regarding entities when the business is providing essential goods and facilities. Entities inform, okay, recycling and all. Entities should transparently and accurately disclose all kinds of adverse impact. Entities are responsible to educate and make aware their consumers about their rights. From the above information, identify which core element is related to principle 9. What is principle 9? Okay, provide value to the customers in a very responsible manner. Okay, so it is very important that you understand what is principle 9 first. Principle 9 talks about providing value to the consumers in a very responsible manner. So this is quite a straightforward theoretical part. If you have studied the principles core elements correctly, then you know in that principle 9, you definitely report about entities which consume about when business are providing essential goods and services. They have to talk about all this. Universal access, including those services have been discontinued for any reason. This is included. safe and responsible way of usage that you have to mention, and transparently and accurately disclose all kinds of adverse impact. Correct? So 1, 2, 3 all are included, but this fourth one will not be included. Okay, so the answer here is, this purely depends upon how well you have studied the theory here. Okay, so the answer will be 1, 2, and 3. The answer is B. This is included, this is included, and this is included. Okay, so when you look at principle 9 and you go through the core elements, these 3 points are very clearly covered in the same language. Okay, so they're included, but last point is not covered. So principle 9 talks about these 3 things. Okay, so the answer will be 1, 2, and 3. That is going to be the option number B. The option B is the answer. Okay, then next, moving on to the next one. Messrs. DEF and Associates have been appointed as the statutory auditor of JKL Limited, a PSU engaged in generation of electricity from solar power. The Committee on Public's undertaking, with a view to examine PSU's physical and financial performance, is examining the reports and accounts of public undertaking and also audit findings of CAG. Okay. Following are some of the functions of specialized committees. First of all, which are the specialized committees in PSU? When you talk about, CG, C&AG and all. So basically, specialized committees are going to be the Public Accounts Committee. Then we have the Estimates Committee. Then we have COPU, Committee on Public Undertaking. Okay. So they're asking you regarding, let's read the question first. From the above function, which are the functions of Committee on Public Undertakings? So COPU, we call it to be COPU, which are their functions. First is what? To examine the statement of accounts of autonomous and semi-autonomous. No, autonomous, semi-autonomous accounts will be examined by the Public Accounts Committee. So it is not going to be COPU. Then to examine the estimates. Estimates, what comes, you understand, it's Public Estimates Committee. There's Estimates Committee talks about it. So economies, improvisation and all, Estimates Committee will do it. To examine the autonomy and efficiency of public undertaking, obviously will be done by a Public Committee on Public Undertaking. To examine public enterprises to a comprehensive appraisal or evaluation of performance of undertaking. This is a very easy question, I think. With the name itself, you understand. Italic 3 and 4 is the answer. So the answer will be 3 and 4. D is the answer. There is some problem with the system. 3 and 4. This is correct one. Okay. First one was PSC. Second is Estimates Committee. And third talks about COPU. Third and fourth. So the answer is going to be 3 and 4. 3 and 4 is your option is D. Okay, moving on to the next one, integrated case study 2. Messrs. HBM and Company is a firm of chartered accountants based in Chennai. CAM, CAV, and CAH are the partners of the firm. The firm is engaged in various assignments, including audits, and its engagement partners who are handling the respective assignments for the financial year 23-24 dealt with following issues raised during and after the course of their respective audit. Okay. So they're doing audit and multiple other assignments also. So the issues faced are: Messrs. HBM and Company are appointed as statutory auditor of AST Limited for the financial year 23-24. CAV, the engagement partner while conducting audit of AST Limited, was encountered with significant difficulties. He observed that there are not only inordinate delays by the management, but lack of willingness by the authorized personnel of the company in providing required information necessary to perform audit procedure in making the assessment of AST's ability to continue as going concern in the view of material uncertainty relating to it. So whenever questioned, they're not giving any responses. CAV wants to communicate this and other circumstances and additional information in his report with the TCWG, that is those charged with governance. Okay. Okay. Financial statements VED Limited for the year ended 31st March were signed by CAH, the engagement partner, on 15th May 24. The AGM was decided to be held during the month of August 24. On 17th May, after date of signing, the company has received a communication from central government that amount of 8,500 crore on account of incentives in respect of 21-22, which was kept in abeyance, would be released to the company by 15th June. Okay. According to the board of directors of the company, agreed to amend the accounts and give approval to be included in the financial statements. We can look at the question and understand very clearly it's about subsequent events. Events known to the auditor after the date of auditor's report, but before the date of AGM. During the course of audit of SIM Limited, there arose doubts as to reliability of written representation. I don't know why it has become the most interesting part for the institute. About the reliability of written representation, question has been asked repeatedly. During the course of audit of SIM Limited, there arose a doubt regarding reliability of written representation regarding the existence and the value of certain machineries. The management gave a certificate to prove the existence and the value of machinery as appearing in the books of accounts. but the certificate received from the registered valuer shows a value which is inconsistent with the written representation. So there is a contradictory evidence, one from the valuer, one from the management. So when this happens, we have a doubt regarding the reliability of the evidence. Correct? So SA 580 has to be highlighted. HT Institute of Professional Studies is a reputed educational institution providing various courses in the field of commerce and arts. The management of the institution is inclined towards imparting quality education to the students. Therefore, most of the faculties engaged by them are qualified professionals. So CAM of Messrs. HBM and Company is an alumnus of the institution, and he has joined the visiting faculty for teaching financial management and accounting subject. Who is he? CAM of, okay, Messrs. Okay. Okay, okay, that's the audit firms. Okay, one of the partner has joined it. The management of HT Institute of Professional Studies is highly satisfied with his teaching skills and level of knowledge he possesses. Due to his capability, the management offered CAM to take up the assignment of statutory auditor of their institute for the financial year 23-24. Based on the above facts, answer the following questions. In the response of the management offer, guide CAM whether to take up assignment of statutory audit. Now tell me, he's acting as a visiting faculty there. So will he be allowed to take the audit of that same entity, same institution? Obviously, the answer will be no, because we study the clause 4 of the part 1 of second schedule, which talks about if you believe there is a substantial interest in the entity whose audit has been proposed to you. All right. Then when you look at the institute's clarification given, okay, where you cannot provide opinion, one of the areas where you're serving as a visiting faculty. Okay. The faculty's part is covered here. So basically, you will be guilty if you accept the engagement, because it will be deemed to be that you have a substantial interest in the entity. So you will be guilty under you will be guilty for professional misconduct under the clause 4 of the part 1 of the second schedule. Select the correct option. CAM can accept the assignment. No. Okay, the answer here, this is no. CAM cannot accept the assignment as it violates the clause 4 of part 1 of second schedule. Yes. CAM can accept the assignment as it doesn't create substantial interest. No, because when you look at the discussion clearly, substantial interest part where they're discussing about not to provide opinion, one of the part is regarding faculty also been very clearly given. So guilty. CAM cannot accept the assignment as it violates the clause 11. No. The answer is going to be B. Okay, then next one. In the view of the Board of Directors of VED Limited, agreeing to include the amount of 8,500 crores on the account of incentives in respect of financial year 21-22 in the financial statements of the company for the financial year ended 31st March 24 by amending the accounts, CAH shall consider the following procedure. So basically, you have to remember about SA 560, events that became known to the auditor after the date of auditor's report, but before the AGM. Correct? So in this case, what procedure we say? That he can definitely agree to the man. First of all, he has no responsibility over this. But if he believes that this would have changed the opinion, then, or this would change the decision, okay, then in that case, obviously, he can take up for the extra procedures to be performed, which will be restricted to the new changes that have been included in the financial statements. Then he will obtain sufficient appropriate evidences by performing the procedures on these new matters. Then he can come up with a report wherein there could be dual dating. That is, you can keep the original date as it is. Plus, new date will be included for covering the additional things that are there, including all the additional matters. Or completely new report could be given up by the auditor. All right. So these are all the things that we take up. So they're asking you identify incorrect. Okay, incorrect procedure. Carry out the audit procedure necessary in circumstances on the amendment. Yes, you can do this. Extend those audit procedures to date the new auditor's report, which were designed to obtain sufficient appropriate evidence that all the events occurring between the date of financial statement and the date of auditor's report that require adjustment or disclosure in the financial statement have been identified. Provide a new auditor's report on the amended financial statement. The new auditor's report shall not be dated earlier than the date of approval. Correct. Date of approval of amended financials. Correct. Then modify the opinion as required by SS 705 and then provide the auditor's report. Modify will be when you find some misstatement, right? Which is incorrect. Extend those audit procedures to the date of new auditor's report, which were designed to obtain sufficient appropriate audit evidence that all the events occurring between the date of financial statement and the date of auditor's report that require adjustment. So this is correct. So A is correct, B is correct, C is also correct. See, modification will happen when you find an opinion where management is not agreeing to do the adjustment and they are also giving your report to the outsider. Okay, without, taking your consent and all that. So you are required to give a public notice and all. So the answer is D. Okay. So ninth one answer will be D. CAV, the engagement partner in the course of audit of AST Limited, wants to communicate as he considers necessary to include additional information in the auditor's report in accordance with SA 260. Additional information could be what? It could be regarding emphasis of matter paragraph. If you want to include something in, key audit matters, okay, as a key audit matter you want to tell in the audit report. Regarding going concern uncertainties, if you want to include, you discuss with the management, correct? So here following are the circumstances for which communication with TCWG is required. Help CAV in getting identified incorrect circumstances from the below mentioned circumstances. CAV engagement partner in the course of audit of AST Limited wants to communicate as he considers necessary to include additional information in the auditor's report in accordance with SA 260, communication of matters with TCWG. Following are the circumstances for which communication with TCWG is required. Help CAV in getting identified incorrect circumstance from the below mentioned. Okay. When the auditor has concluded that there is a uncorrected misstatement of the other information, if there is uncorrected misstatement, you discuss this with management and TCWG. It's correct. When the auditor considers it necessary to include EOM, obviously you discuss this matter with the TCWG, okay? In accordance with SA 706 or is required to do so. When the material uncertainty relating to going concern is reported in accordance with SA 570. Where there are no key audit matters to be communicated in accordance with SA 701. Oh, this is, just 1 second. There is a confusion here. This you have to report. When the auditor considers necessary to include EOM, also you discuss. When a material uncertainty relating to going concern is reported in accordance with SA 570. So when you're reporting this, you already discussed this with the management, and if they are not doing it, then you go in for giving a modified opinion. When a material uncertainty relating to going concern is reported in accordance with SA 570. When there are no key audit matters to be communicated in accordance with SA 701. What is key audit matter? From the matters communicated with the TCWG, the auditor which considers to be very significant, he reports as key audit matters. The answer is D. This also, material uncertainty also, if you're including it in the auditor's report, then in that case, you have to communicate this matter with management, a significant matter. So, but if there are no, out of all the matters that you communicate with TCWG, what is key audit matter? Those matters which you consider very significant, okay, that you include as CAM, for which you don't have to intend to give a modified opinion on. So if you decide there is no CAM to be included, you don't have to communicate with management or TCWG. Answer will be D. Okay. Then next one. Since there arose a doubt of management representation, consider the responsibility of HF. So there has been a doubt regarding the reliability of written representation. So what is the incorrect option here? So they are asking you about incorrect option, okay? Although written representation provide necessary audit evidence, they do not provide sufficient appropriate audit evidence on their own about any matter with which they deal. Correct. So this is correct only because they are not sufficient appropriate evidence by itself. They're only corroborative evidences. The fact that management has provided reliable written representation affects the nature or extent of other audit procedure that the auditor obtains about the fulfillment of management responsibility or about specific assertion. Yeah, because then your procedure will come down, right? If you believe the management representations are reliable, then the nature and extent of the other audit procedures could be considerably brought down. Okay, consider as in you can have a lesser procedure. In case of identified inconsistencies between one or two written representation and the audit evidence obtained from other sources, the auditor may consider whether risk assessment remains appropriate, correct? And if not, revise the risk assessment and determine the nature, timing, and extent of further audit, correct? Because this is an indicator that there is a risk. Okay, so all that we have obtained might not be correct. So you will reevaluate your risk assessment, and based on that, you will design further audit procedures all over again. Correct? So that is correct point. The auditor may have identified significant issues relating to competence, integrity, ethical values, or diligence of management, and about its commitment to or enforcement of these, but concluded that the written representation are nevertheless reliable. In such a case, this significant matter is documented in accordance with law. If you have a doubt regarding competence, integrity, ethical values, and all, then how can you say the written representation given by them is reliable? So the incorrect will be this one, because when will you believe a written representation will not be reliable? When you have a doubt regarding their competence, integrity, ethical values, then the written representations obtained from them are obviously not going to be considered to be reliable. Correct? So in this case, how can you consider it to be reliable? So not possible. This is D is the correct one. It is incorrect. All right. Then after that, we have the last case study. Tom Limited is in the business of manufacturing and distributing of toys for the past 25 years. Since inception, the company is having its own in-house dedicated internal audit department. So SA 610 is highlighted. Having a team of competent and qualified chartered accountants headed with the chief internal auditor with a systematic and disciplined approach, monitoring various internal controls laid down at the levels of functional areas. Mrs. Deva and Company Chartered Accountants have been newly appointed as the statutory auditor of the company for financial year 24-25. Mrs. Deva and Company wants to use the work of internal audit function in respect of testing operating effectiveness of the control and in respect of substantive procedure involving limited judgment. Are they correct? Yes. So they can take the assistance. Due to time constraints and the extensive scope of a statutory auditor, Mrs. Deva and Company wants to take direct assistance of the internal auditor in the areas of physical verification of fixed assets, inventory verification, and goodwill impairment assessment. Accordingly, Mrs. Deva and Company are in the process of determining in which area and to what extent internal auditors can be used in and which area statutory auditor shall not use the work. So we have studied SA 610. You have two options. Either you use the work of the internal auditor or you take the direct assistance. But when you take direct assistance, you have to take into account a lot of things where direct assistance would not be suitable, where auditor is required to do the work by himself only, where he requires to do some kind of judgment analysis, or where risk is very, very high. Then in those cases, obviously, you will not be taking the help of the internal auditors. Or if that particular responsibility originally is performed by the internal auditor, then also you can't ask him to do it again. So there are certain restrictions given to us for having our work done properly. Mrs. Deva and Company, during the course of identifying and assessing the risk of material misstatement through understanding the entity and its environment, and during the course of performing the audit procedure, finds that company is holding significant bank accounts and having branch operations in tax haven jurisdiction for which there appears to be no clear business justification. Also, there were significant related party transactions which do not appear to be normal course of business. So there is a fraud. There could be a possibility of fraud. The audit report of Tom Limited for the last financial year 23-24, audited by predecessor auditor, contained qualification regarding non-provision of doubtful debts. So they did not provide for doubtful debts, so you qualified your report in the previous year, the previous auditor. In financial year 24-25, that is current year, the company does not still want to make a provision on doubtful debts. The statutory auditor, Mrs. Deva and Company, in their auditor's report on the current period financial statement, want to report the same. So obviously, they are going to report about it because again, they'll end up giving a qualified opinion. And this is because current year also they have not created, and previous year's qualification was because of that. Correct? So obviously, you'll end up giving a qualified opinion, modified opinion. Pursuant to reporting requirement under CARO 2020 in respect of the company's regulatory in depositing statutory undisputed arrears of outstanding statutory dues to the appropriate authorities, Mrs. Deva and Company are considering to take a view on the following issue observed during the audit of Tom. The company, in the view of voluminous payroll, that is too many employees, consistently followed the method of making lump sum deposit of estimated amount of ESI collection and adjust the excess or deficit against next following month's deposit, and the difference of the said amount always remains insignificant. Okay. Based on the above factors, answer the following. Out of the following, with the view of Mr. Deva and Company, is correct on for complying of reporting requirement of CARO as regards to lump sum deposit of estimated ESI collection and its adjustments against next month's deposit, leaving insignificant difference. Okay, so they're telling that whatever they're doing lump sum collection, lump sum payment, and if there is any kind of deficit, they are adjusting it immediately in the next month. Okay, so when you look at the clauses of CARO, we know about the statutory dues, and ESI is very much covered under the statutory dues. So there we have clause 7. We talk about A and B. One is about undisputed, other is about disputed. Here very clearly it is undisputed. ESI comes under statutory dues. But then understand, reporting is required if they are outstanding for a period of more than 6 months from the end of the financial year. But here if you look at it, they're telling you that they are adjusted immediately next year. So it is not going to be for more than 6 months, obviously. Second, they're also telling the amount is very insignificant. So if you apply the professional judgment regarding the materiality concept, then I don't think so the reporting of this has to come in CARO. Okay, so based on that, let's look at the questions. The company consistently follows the method of payment in respect of ESI collection, and the difference between the total dues and lump sum deposit is not significant. As per materiality concept, it did not be considered that dues have not been regularly deposited and hence not to be reported. According to me, this would be the answer. Okay, we could definitely welcome any kind of discussion and interpretation here. Okay. Depositing of ESI collection and the arrears of ESI dues cannot be considered as no, wrong. ESI is obviously a statutory due. Okay. So B obviously is not the answer. Lump sum deposit of estimated ESI amount and adjusting excess deficit against the following month's deposit shall be considered as dues payable and hence to be reported. No, because dues payable also understand you will report when they're outstanding for a period of more than 6 months from the end of the financial year. from the date they have become due. Okay, so you have to understand 6 months criteria also we have to consider. Immediately next month it's getting adjusted. Even the difference between the total due of ESI and the lump sum deposit is not significant. It shall be reported. No. Answer will be A. Then 13th one, issues identified by Deva and company with regard to holding significant bank accounts and having branch operation in tax haven jurisdiction and significant related party transaction is a fraud risk factor. That obviously it is. What is the condition created by fraud risk factor? Condition created. Fraud risk factors could be by perceived opportunity, by rationalization of mind, or it could be by incentive pressure. So out of the three, what could be the reason? And what does it result in? So understand tax haven jurisdiction and significant related account transactions will help you to make a fraudulent financial reporting because you can, move the funds here and there. Siphoning of funds could happen. They could, transfer the profits to the tax havens for evading the tax and everything. Okay, so basically manipulation of accounts can happen easily. So it could be a reason that fraudulent financial reporting is happening. And because you have a perceived opportunity, it is possible. So because of that, you're doing it. So it could be the reason could be a perceived opportunity and it could result in fraudulent financial reporting. Rationalization, no. Risk factors create incentive or pressure. Of misappropriation of assets, no. Movement is happening, no, from here to there. So because of that, we could say it is going to be siphoning of funds, overstating the profits, understating the profits in one area. In branches, they show more where there is a tax haven and all, to evade the taxation and all. That kind of arrangement is done. So fraudulent financial reporting is correct. And it's perceived opportunity. It's possible. So opportunity available, they're taking it, grabbing it. So answer is C. Perceived opportunity for fraudulent financial reporting. Mrs. Deva and company assigned the following procedure to internal auditors to provide direct assistance that relate to higher assessed risk of material misstatement where judgment required in performing the relevant audit procedure or evaluating the audit evidence gathered is more than limited. First of all, I told you 610 tells you what kind of work you cannot give. Direct assistance cannot be taken. High risk of material misstatement, no. Okay, judgment involved too much, no. Because auditor's professional judgment is important. Ultimately, he is responsible for the report. So you don't delegate such kind of work. That relate to the work with which the internal auditors have been involved and which will not be reported to the management or TCWG by internal audit function. So this can be given. That relate to decisions the statutory auditor makes in accordance with SAs. Decisions as in regarding audit risk, regarding materiality. These decisions have to be taken only by the auditor. The assistance of the internal auditors will not be helpful here. So answer here, which could be possible, is only 2. So they can give only the second one. Correct? Then. Last, Mrs. Deva and company in their auditor's report on the current period's financial statement want to report that Tom Limited does not want to make provision for doubtful debts in the financial year 24-25. Identify the correct action to be resorted out of the following. As per SS 710, can modify their report for previous year's figures of financial statement since the auditor's report on prior period as previously issued included a qualified opinion. Can modify their report for previous year's figures of the financial statement since the auditor's report on the prior period previously issued included qualified opinion. Okay. As per SA 710, can modify their report for current year's figures of financial statement, but did not refer to the previous year's modification. No. In the basis for opinion or qualified opinion, you have to mention why you're doing it. As per SA 710, will have to modify their report for both current and previous year's figures of financial statement, since the auditor's report on the prior period, as previously issued, included a qualified opinion. As per SA 710, cannot modify. See, B and D is not the answer. But when you look at A, as per SA 710, can modify their report for previous year's figures of financial statement. No, current year figures also will go wrong, right? Because they have not created provision even in the current year. So the answer is C. So provision not created previous year, so they are wrong. Provision not created current year, so they are also wrong. So previous year's figures are also wrong when we give a regard to the previous year report. And current year, because they're not adjusting even now. So even that is the reason for modification. So the answer would be C. We'll modify both current and previous year's figures. Okay, and we talk about both. That current year also you have not provided and previous year's report also has been qualified because of that. Answer is C. Yeah, so that's all regarding the MCQs. Okay, I would again say that if you require any further discussion, you can definitely have an interaction and we can discuss about the interpretation and everything. Okay, so most welcome with any kind of discussion which could be possible. Regarding descriptive, there have been questions on all the new areas. Questions on Caro has been there. Question on SQC, which is Institute's favorite, is there. Then questions are on SREs. Okay, about NBFC also different type of question has come. On professional ethics, there are good number of questions and good questions they are. Okay, so overall the paper is above average. A person who has properly done the content reading, that is the notes have been followed very nicely. And you have not only focused on question bank, doing some past exam questions and all. If that was the kind of preparation you have done, then you'll find very difficult. But if you have gone through the theoretical content, okay, in-depth preparation if you have done, I think you'll be able to score well in the paper. Okay. So with this, we complete our discussion regarding the Audit November 24 paper. Okay. And all the very best for your upcoming papers. And I would request all the students who are writing the next group to leave the discussion here, be completely free from your things that you have written in this paper, completely come out of it, and please concentrate completely afresh on the second group. Okay. So please do not have a load of any of the first 3 papers already done in the next group of papers. Do not do that. Okay. Don't hamper your preparation or get, preoccupied by something else in your mind. So you have to give your complete focus on the coming papers because you know how the coming papers are, the volume and everything. So please focus dedicatedly on the group 2 now. All right. So with this, I conclude here. All the very best for your upcoming papers. And for the ones who have written the group 1, all the very best for the results that you're expecting.